In the last few days, Cathie Wood and Ark Invest has quietly been buying up this massive tech giant. And when I say giant, I mean a company with over $1 trillion in market cap, making it one of the largest businesses in the entire world. And although this company is over $1 trillion market cap, guys, they still are growing and growing rapidly. This year, growth is expected to be around 6%, not bad. But next year, oh man, about a 20% jump in revenue year over year is expected. That is absolutely mind-blowing to see that kind of growth in such a large business, but it just goes to show big tech, they're still winning. We all know the tech giants, right? There's Google, Microsoft, Apple, Amazon, Facebook. Those are the big five. So comment in the comment section down below, which one of these five do you think that Ark is actually buying right now? Also, while you're down there, guys, consider smashing that like button. Helps the channel out tremendously. I truly appreciate it. And one like goes a long way, so thank you. Okay, got your guesses in? Let's reveal this business. Google, or now known as parent company Alphabet, is the stock that Ark has been buying, so let's discuss it a bit further. So far, Ark has made 2 purchases in Google, ticker symbol GOOG, one on October 12th and one on October 13th, for a total of just over 3,750 shares. We all know the price of Google shares are high, so this totals to around $6 million in value. So it's quite a significant buy here for just 2 tranches. As you can see, these purchases were added to their ARKQ Fund, which is their autonomous technology and robotics ETF. So this may be a bet more on Waymo as opposed to the actual Google company here. Now, Waymo has been breaking the internet lately because they launched their robo-taxis, which is a self-driving taxi service without a human driver. This is something a few other large players are working on, including obviously Uber and Lyft, but also Tesla, who plans to eventually have a robo-taxi network with their Model 3s and Model Ys. This is getting to be a competitive space, and it looks like Cathie Wood and the Ark team liked what they saw from Waymo here with this early release, essentially being the first to market here, and they're buying shares to show just how bullish they are. Now, if you're not familiar, Waymo is actually owned by Google or Alphabet, so this is essentially a Google product that's going to be available to consumers. Don't get too excited because right now it's a very limited release, as the service is only available in a limited amount of areas until regulation can really catch up and until more data is collected for more complicated and complex environments. So from my perspective, just my opinion, I believe that Ark is actually more interested in this self-driving Waymo aspect venture that Google's after, as opposed to the traditional advertising business of Google. So now what I thought would be interesting is to spend a bit of time looking at Google's valuation to see, what price is Ark really paying for this stock, and whether it actually makes sense for you and I as regular retail investors to also considering following Ark with this venture and getting some exposure to Google for the possible massive success at Waymo. So far year to date, Google is up a modest 14%. This is a far cry from many other tech names or high growth names, but it's still a good return, all things considered. And the stock is relatively stable. It doesn't see a whole lot of volatility, and it's usually one of the least popular tech giant stocks in my opinion. But that doesn't make it a bad stock or a bad investment. In fact, most of my biggest winners have been when a stock is out of favor, or there's fears around the business, or it's just not a stock that people want to own. And I come in, look at valuations, I'm like, this makes a lot of sense. I believe the fundamentals of the business actually justify a higher price, so I buy in, and then eventually the media catches up, Wall Street catches up, all the hypes around those stocks, and you have multi-bagger winners, for example, Tesla and Nvidia. Now, what's incredible about Google is just how fast they've been consistently growing year after year, and as a result, profits have also been growing year after year. Looking at this chart, it looks like Google is just a small cap growth company, not a $1 trillion giant, so it's quite impressive to say the least. Now, along with this, Google is also a high margin business. They have been buying back shares in recent years, and they have one of the strongest balance sheets in the entire world. They have over $121 billion sitting in cash, and that's money just waiting to be deployed, possibly on some big acquisition at some point. Total assets for the company sits at $278 billion, which is mind-boggling. Now compare this to their liabilities. They're fairly negligible, only a $4 billion debt charge that is sitting on their balance sheet, and around $71 billion in total liabilities. So they can easily pay off every single one of their obligations and liabilities in cold hard cash and still have a ton of money left over to grow their business. Google is actually at a point where they don't know what to do with their cash. They can go out and make acquisitions, and they do make a lot of acquisitions regularly, but a lot of them don't really go too far. It's kind of failed ventures, lost money, whatever. It doesn't really make a big difference on their balance sheet, as you can see. However, because of this massive size, because of this massive cash balance, I think what Google's probably going to start offering in a few years is a dividend. Now, two other tech giants, Microsoft and Apple, already started paying a dividend in the last few years. Microsoft's been paying it for a bit longer than that, but Apple is kind of catching up to that now. And although they are still both good growth companies as well, that added benefit of a dividend attracts a lot more money into these stocks. I believe that Facebook and Google will probably start doing this as well in a few years. However, right now, with their growth of like 10-20% year over year, there's no real need to entice more investors to come into the stock right now. It's usually when a business starts to stagnate, starts to level off, they don't really see that much growth ahead, but they see consistent profits. That's when they start paying a dividend out. And like I said, I think soon enough we'll see that in Google. So I believe my perspective, Google may actually be an opportunity here. Now, I haven't really crunched the numbers to see if the valuation in terms of, price to sales, PE, all that kind of stuff actually makes sense here. So that's something you'd have to do due diligence, something that I preach on this channel. But the point I'm trying to get across is that Google is out of favor right now. I don't think there's any doubt about that. It is a high growth company. It's a very profitable business. So looking at all these metrics, some exposure to this company may make a lot of sense. I know that most people are chasing the high flyers, I want to get more Apple stock. I want to get more Tesla stock. I just want to keep buying these stocks that keep going up, 10% every few weeks or so. But what about these other businesses like Google that has these consistent returns, that has this massive cash balance that they can deploy whenever they want, but investors aren't really feeling it because the stock price hasn't been performing as well as the others? Soon enough, guys, I think, reality catches up. Google will see a big rise in their stock price at some point. So if you want a good opportunity in a big tech name, Google may be that opportunity. And hey, maybe Ark sees this opportunity. Maybe Waymo is just one aspect of it, but they also see that Google is very undervalued right now based on its metrics. There are so many high growth companies that are around Google's growth numbers, but are trading at much larger valuations with much worse balance sheets. However, Google, investors are like, this is kind of a boring name. I'd rather not put money in here, I'd rather put money in this other high growth name. So if you believe Ark, you believe their vision here, you are a follower of Ark, you believe in Cathie Wood, all that kind of stuff, and you think that this Waymo venture will actually pan out for Google, this is an opportunity for you to get in at a reasonable price in a great tech giant. But hey, this is not financial advice, so remember, do your own due diligence, guys. But either way, let me know in the comment section down below, are you a believer in this Waymo service that Google has? Or do you believe that Tesla with their robo-taxis will just dominate this market? Or do you believe that Lyft and Uber will continue to be the market leaders in this space because they will also have self-driving robo-taxis soon enough? This is going to be a fun space to watch over the next few years. There's going to be a lot of innovation, a lot of competition, and as consumers, we're probably going to end up winning with a lower price than we're paying right now for these services. Either way, guys, comments, questions, thoughts, all of that in the comment section down below. Thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.